Good morning, one and all. If you are too comfortable, it's time to move on. Terrified of what's next? You're on the right track. A great quote by Sushan Hill. With this quote, I wish each one of you a very lovely, beautiful morning and welcome you all to the IIEBM's induction program of 22nd batch. I, Professor Neeraj Kumar Sathone from Placement Team, IIEBM, your host for the session. As you know that this session will be of 1 hour 15 minutes, where first 1 hour will be a knowledge sharing and rest 15 minutes will be for question and answer. You can type your questions in the chat box, which will be addressed at the end of the session. If we talk about competitive analysis, forecasting, MIS, business development, product marketing, channel promotions, who else can explain it better than our today's guest, Mr. Shrinivas Khanolkar sir. He will talk on ESG investing, future and its impact on financial sector. So let me introduce Mr. Shrinivas. Mr. Shrinivas Khanolkar sir have 18 plus years of experience. He is a national sales head, bank and national distributor at Mire Asset Investment Managers India. He worked with HDFC Standard Life Insurance Company Limited as Officer Operations, responsible for providing online solutions to internal and external clients. Also, he worked with SBI Funds Management Private Limited as an Assistant Manager, Product Development and Marketing. Here, he is responsible for systematic gathering of data, assimilation and depiction of information, knowledge sharing, preparation of annual business plan and target setting. Then in Mire Asset Global Investment, he started his journey as VP, National Sales Services, then promoted as Head, West Sales, and then again promoted and now working as National Sales Head, Banks and National Distributor. He is MBA in Finance. So without taking much time, I would request Mr. Shrinivas sir to share his knowledge with our student. Now over to you, sir.
Thank you very much. Thank you for the generous introduction and inviting me to speak on today's occasion where there's an induction program going on. Induction is always a good time to talk to students about what they can look forward for while they are going through the program, as to what entails in the future. And the whole idea when the professors have approached me is to talk about a concept called ESG and what ESG stands for. How is that affecting finance professionals today? How is it affecting the investing community today? What is there in stake for all of us in this room to look at? And as you decide your career choices in forward, probably whether this will be a subject in next 2-3 years, which will become very relevant to you. So let me start my presentation. If you are able to see the screen, if anyone from the moderator can give me a heads up if it's visible. Right.
Yes, sir, it's visible.
Okay, thank you very much. So as the topic suggests, ESG investing, future and its impact on financial sector, right? Now, let me start by probably asking a question. Of course, it's not interactive here, but there are two images here. One is of scrapped used phones, laptops, and the second one is of the recently concluded Tokyo 2020 Olympics. Yes, it's slightly funny to say 2020 and 2021, but we know that it was delayed by 1 year. Now, what is the correlation of these two images? Now, most of us will be thinking that why are we relating these two images? I'm confident that some of us, if not all, some of us would have read about this article about how this year's Olympic medals have been used from recycled material using old smartphones and laptops. So we are talking about a premier sporting event in the world which uses old laptops, smartphones, to sort of, recycle them for making medals. And probably there cannot be a bigger uh, advertisement for recycled material or environment conservation than this, where a major sporting event is sort of going ahead and talking about this aspect. And not just aspect, it has actually gone ahead and fulfilled the project which they began with. So ESG, what ESG is, it stands for environment, S stands for social, G stands for governance. As a concept, it's called ESG. While somebody does investing in this, it is called sustainable investing or responsible investing. Because while you would like to consume a lot of products and you will be happy consuming them, you always now want to keep an eye out for the environment. I'm sure a lot of you uh, also do not dump a lot of litter on the streets. If you've consumed something, a lot of that either goes to the dustbin or goes back into your pocket, and that's a growing habit that we are seeing now in the young population. It's a good thing, and while that is one doing it at a very individual level, what we are talking about a concept of ESG is from a financial aspect. So people who want to be on the financial aspect and want to take your careers ahead, it's very important that you would like to know about this concept. Now, is this a new concept? It's not a new concept. It was a concept which has come out almost in 1758, where you had a community called Quakers in Philadelphia in USA, who actually opposed slavery and war, and they decided, and they were rich people. They were, most of them were business owners. They decided that they will not sort of fund other businesses or people, or they will not give out loans to people who are committed in doing slavery. So that was the first form of ESG, as to say that the first principle of ESG was not putting money in unethical businesses, right? So that was the first form. Over a period of time, in the 19th century, people started associating with alcohol and tobacco as sin goods, and they would not lend out loans to people who used to do that. So it was sort of a status thing that, if you deal with people like this, it will just bring more bad news to you. So that became like the second principle. In the Vietnam War, which happened in between 1967 to 1975, we saw US avoiding. There were some companies in US who decided to launch products where they will not invest in companies which were profiting from the Vietnam War, right? So first such mutual fund was born in 1971. A lot of you would have heard about mutual funds. Some of you would have heard about SIP concepts. So we're going back to 1971 and talking about mutual funds adhering to some principles. And in 2000, the UN came up with a Global Impact Initiative, which you would have heard. Some of you would have heard about Paris Climate Pact and all of that. That's part of this. So all of this is part of sustainable investment, but ESG is like the main framework. Now, how many of you remember or probably would have consumed Quaker oats? Some of you would have definitely eaten Quaker oats, and if you recollect, there is an image on the Quaker oats of a gentleman who's wearing those hair locks like the Britishers used to wear, right? And that gentleman's image is actually based on William Penn, the famous novelist from the 17th century, 18th century. That image is modeled on him. And William Penn, coincidentally was part of the Quakers movement back in the days. So that's the association. So next time you look at William Penn and you look at Quaker Oats, you should draw a parallel of how that is linked to ESG in its original form. Right. So let's move ahead. Now, what about funds? What about investments? Is it sustainable investing? Is it a big theme? It's looking like a big theme because we are looking at assets under management. Now, in finance or in investing, the people who are responsible for managing money, they count the money under management as assets under management. So next time you hear about assets under management, think about it as the money that is being given to you to manage and invest in the markets. That amount is now touching almost $1 trillion. So people who have $100 trillion, sorry. So people who have been signed up for principal responsible investing. So people in the sense that, a lot of institutions, a lot of corporates, a lot of big companies are now vowing that they will actually do a lot of their business under the ESG principles. And they are also signing up that they will be doing a lot of their investing also in the same format. So this is becoming a very large segment. So today some of you, if you choose finance or if you choose sales under finance and you end up being in this part of the industry, you will find people talking a lot about ESG theme, about how much money is under management and different themes. So overall, ESG is a theme which is evolving. If you look at both companies and investors, now this is a graph which tells you on a global front, in each of this country or continent, what are the number of investors who are adopting to ESG principles and how many companies are also adopting to ESG principles. So when you look at companies like in Europe or UK or Canada or North America or across the globe, you can see that, like, look at the global statistic. It says 61% of the investors want to invest in an ESG framework, while about only 47% of the companies have complied with the ESG framework, which means the demand for doing a ESG investing is actually higher than the supply of the investable papers, right, or the investable securities, which means that slowly the supply should catch up to the demand, which means that this segment will further grow. Now, if you come to Asia or if you come to say Hong Kong or China, then there you see the investor actually demanding more, but the supply side has not caught up, right? So if you look at Hong Kong, 40% of the investors want ESG investing, but only 12% of the companies are compliant. So in Asia overall, the ESG investing principles adherent is slightly lower as compared to the world, but that is going to change very, very quickly. And by the time you guys finish your programs and you will start working, you will find that these things have gone up. Now, in terms of funds, like since I represent a mutual fund company and globally we are looking at funds, there are a lot of ESG funds across the world, and we are seeing most of them slightly dominated in the European countries, US countries, Asian countries, but Asian countries it's lesser as compared to the other markets. So you will see that this will also go up in the coming days, where there will be more exposure, more opportunities for investors to invest in such products. And why this is going to happen is because we believe the 1 degree change moment has probably arrived. Now we all know, and we must have studied in school, that at 211 degrees Fahrenheit or 99.4 degrees centigrade, the water is still in a liquid form. And when 1 degree changes, which is 211 degrees Fahrenheit becomes 212 degrees Fahrenheit, it becomes 100 degrees Celsius, and we know that is the boiling point of water. whereby the water changes its state from liquid to steam, right? And a lot of that steam, once gone away, is very difficult to come back, right? So now, how is this relevant from the topic that we are speaking about? Let's look at 2020 for a minute. If you have to summarize the year 2020, and mark my words, that 2020 will be remembered forever. People will not forget 2020 so easily. And if you have to summarize the year 2020, then probably it can be done in 6 images. We saw the virus, we saw the lockdowns, we saw the unlocks, we saw stock markets crashing, then recovering, we saw unemployment numbers coming up, then again going back. Probably for a large part of the pandemic 2 years that we have been under, um, you may have forgotten your phone to go out of the home, but a mask or sanitizer was compulsory, right? It was very difficult to forget that. Maybe you would have left your phone back, but not this. And then you had various different platforms to continue interactions with, continue your education with. In our field of business, a lot of them also became corporate licenses to do business with. So sitting in our home or in our office, we were able to connect to so many people and continue our work. So 2020 transformed a lot of businesses. It has transformed a lot of our habits. And like I said, that 1 degree change moment, when something you do and you like, that you can still work like this, you can still uh, get educated like this, you can complete your studies in this format, then you are likely to continue with this for a very long period of time. So this is what 2020 has done, and that's why we believe that 1 degree change moment is going to help people do a lot more investing in the ESG format. And if you do not believe this, let me take you back almost 40 years, 4 decades back. This is an image of the Brooklyn Bridge. Brooklyn Bridge connects the cities of New York and New Jersey in US. And in the month, and a lot of us would have seen Brooklyn Bridge in Spider-Man movie, right? Most of the movies you will see. Any movie based on New York, you will see the Brooklyn Bridge. Now, in the year April 1980, there was a transport strike in New York City, where for 11 days there were no public transport. So no trams, no trains, no taxis, no buses. So the people who lived on one side of the city and went to work on the other side of city found it very difficult in the first 2 days to go to work. The third day, they decided to walk and cross the bridge and go to work. This picture apparently was taken at 7:30 a.m. in the morning. People are going to work, they're crossing over and walking across the street. In the evening, the same thing would repeat to the reverse side of the bridge. Now, this happened for 11 days. After 11 days, the city transport resumed. Many of them went back taking those. But today, which is almost 41 years since that incident, if you go to Brooklyn Bridge early in the morning at 8 a.m., stand there, not a crowd as thick as this, but scores of people will be walking past and going to their office. And in the evening, they will walk back to their homes. What has happened 40 years back for just 11 days transformed the way the city functioned, transformed the fabric of the life in that city. And so many people took it that this is part and parcel of their culture to walk to work, right? And imagine in 11 days, if that can happen for which can last for 40 years, we have been in pandemic for 16 months. 16 months we have got adapted to some things which will be very difficult for us to undo. And that's what has happened to investing also. So when we talk about ESG, just last year in 2020, $50 billion were invested in the ESG investing framework across a lot of different product segments, but overall it was the ESG framework which received this money. This was a huge acceleration than what we saw previously, because 2020 made people realize that life is very fragile, and if we are doing something, might as well do it in the right way. And that has helped shape up the future of ESG investing, and a lot of them are taking this much more seriously than what they used to do earlier, both at the investor front as well as on the company front. There is an estimation that by 2020 or even earlier, this entire investing will reach about $100 trillion, right? And only in ESG framework. So what we saw, the first slide was about the entire sustainable investing theme, but within that segmentation which follows the ESG framework, it will reach about $100 trillion mark, which is going to be an incredible number for investors to pour their money in this world. Now, we've been hearing a lot about ESG, but what actually is ESG? It's always good to probably hear a few things about it before coming to the actual topic so that there is more curiosity around it. Now, what is ESG? ESG, like I said, stands for environment, S stands for social, G stands for governance. Now, what under environment? So each and every company gets a score based on the following parameters. So the company will be judged on whether it is having a positive impact on climate change or a negative impact or a neutral impact. So accordingly, they get 1 mark or a deduction of 1 mark. Like they get more marks, but I'm saying that the scores are calculated on a quantitative basis. But I'm just making it simple for you. Do they emit carbon emission levels? Are they acceptable? Are they below, or are they neutral? So they will get a mark for that, or they are deducted a mark. Is it polluting air and water? Are they doing anything to control that? They will get marks, and these are relevant for companies which are under this segment, right? Like a social media company will have more score on social and governance rather than environment. But a company who is doing mining or doing cement, they will have more score on the environment. Accordingly, now let me come to social. I think a lot of you will associate social media companies easily. Now, in the month of, say, March 2020, for a lot of us, a lot of companies, including your institute, would have really been faced by one big challenge. How do I continue doing business while my people are sitting at home? And how do they access that data if they have to work on it without that data getting leaked in the public domain? So data protection became a very important feature. Data privacy became a very important feature, right? VPN accesses became very important. So these now scores are given for that. If your data got leaked, then you will get negative scores. If your data was protected well, you will get positive scores. Now, customer satisfaction. So customer satisfaction, customers can be internal and external. So how satisfied they are, what sort of reports you send out to them, what sort of surveys you do with them, what you get back. Employee engagement, gender and diversity, what is the male female ratio, how many are sitting on the board, how many are in the senior positions. So all of that gets scores. Governance, again, India, all of us should be very proud that India ranks very high on governance standards across the world. So there are score patterns for that. That what is the board composition? Do you have any corruption cases? Are there any whistleblower schemes? Is there any executive compensation to the total earnings? Is there a cap? How does it work? It is well diversified? So all of that comes into play, and companies are rated on scores based on this, and all of this score is that's compiled to arrive at a common score for a company. Like how you will do a lot of different projects and you'll do different subjects. Eventually, and you'll be marked on all of that. Eventually all of that will be combined together to get your GPA score, right? So that's what ESG scores also come. All the companies, individual companies, are rated according to that, and then we, as manufacturers of financial products, we use those scores to judge whether these companies are good from an ESG framework for doing investments. Right now, unfortunately, a lot of the corporates still don't believe that ESGs can have financial impact on the company. Now, this was a survey done before 2020. It was done just beginning of 2020. I'm sure the next survey will speak different results, because in the past we have seen many companies having issues and their stock prices taking big hits. So in 80s we saw Nestle having some issues with their baby formula in the emerging countries. We saw BP oil rig in 2010. I don't know what you guys were doing, but you would have read about, there was an oil spill in one of the British Petroleum's oil rig near UK, which had a big environmental disaster, which continues till date. Recently, you would have read about some Uber cases, or Oxfam or Wells Fargo, a very famous bank in US, created millions of fraud accounts. So all these companies, or a Volkswagen. Volkswagen is a great example, where Volkswagen cars were recalled because they had tweaked with the emission norms. Right? They had falsified the results of those emission tests. So it had a big impact on the valuations of all these companies. So these are big red flags for ESGs. In if you come to India, what we have done is we have given you exhibits A to G, and we have given you the performance of those companies on stock markets. Now let me take the first example, like A. In May 2013, one Indian pharma company was charged with a felony charge in US of almost $500 million. Now, what happened to its stock price? If you look at the right hand side chart on A, you will see that in one day, the day when it was announced, the stock came down by 9%. In 1 week, the stock came down 11%. In 1 month, the stock came down 25%. So that was the impact, financial impact on the stock, because of something which was not right, which that company did. On Exhibit B, in February 2018, you saw a very large public sector bank which failed to have a check mechanism, and because of that there was a massive fraud by one company, right? Now what happened to that stock? That stock was down 12% one day, 19% in 1 week, and 32% in 1 month. So two different companies, one pharmaceutical company, one bank company, but whenever there were issues like this, you face financial impact, right? Now let me come, I won't go through each and every example, but let me come to the last such example, which happened in last year, and some of you would have read about it. In March 2020, the Reserve Bank of India, which is the prime, central bank for India, seized the board and the management of a bank because they were not able to do the governance reporting in the proper specified format, and there were a lot of corporate governance issues with that bank. The stock fell down 55% one day. Imagine if you're an investor in such a stock. You're holding 100 shares of 100 rupees each, and next day those 100 rupee worth value of stock is down to 45 rupees. How will you feel? Right? This stock then recovered, but over a month it was down 35 rupees, right? So this is how 35% basically. So this is how non-compliance of ESG can have impacts across companies, across sectors, and some of these examples are here. Now, we are not saying that ESG framework or applying ESG framework to companies will stop this from happening. But like I said, the scores will start showing up saying that there is something wrong. So the manager who is managing the money or the investor who wants to invest in this segment, it becomes easier for them to judge whether they would like to be then remained invested in this company or not, or they can decide whether they want to exit, right? And while this is a subject which is maybe slightly early for all of you, in investing now, there are two sets. One is an actively managed product, and there is a passively managed product. Actively managed product is where the fund manager or the manager of the product, financial product, decides what to do, what action to take, what stock to buy, what percentage to buy, what to sell, and when to sell. In a passively managed fund, it is a rule based investing. You would have probably started hearing of concepts of ETFs, which is exchange traded funds, where it's a pre-packaged of say 20 stocks, 30 stocks, 50 stocks, 100 stocks, 500 stocks, and it will be available for you to buy and sell on the market, or you can take a call. Whereas the daily change in its portfolio does not happen on a daily basis. It is done periodically, and those announcements are made on time. So there's a difference between active and passive. Now we are also seeing that the passive side of the ESGs is also growing. It's almost hitting $1 trillion now. And this is a segment which will continue to grow. If you want to know more about ETFs, you can probably go to our website, and there'll be a lot more written about ETFs and the way it functions. Some of you may be using Clubhouse. You can join groups which are specifically catered to passive investing in ESG investing or ETF investing. It will also give you some insight on how these things happen. Now, on the Indian stock market, we have three indices which are there for ESG. We have the Nifty 100 ESG index, we have the Nifty 100 Enhanced ESG index, and we have the Nifty 100 ESG Sector Leaders index. Now, you would have heard about Nifty 50, BSC Sensex, Nifty 100, maybe mid cap. Some of you would have heard about it. There are some specialized indexes which are on ESG framework. I would recommend that if you're interested to know about ESG, go to the NSE India website and go to indices, where you will find thematic indices, and in that you will find various indices where there are these three ESG indexes. You can read more about them, that what companies qualify, how do they qualify, what happens, right? Now, I'm also very proud to tell you that Mirae Asset Mutual Fund is India's first mutual fund which has launched a ETF on the ESG Sector Leaders Index. So it is the first company in India which has done a passive fund. Most of the funds are of active nature. But we're not going to talk more about that product. Just wanted to park that information. So if you want to know anything more about it, you can go to our website and check that out. Now let me move ahead and talk about how is a mutual fund and ESG integrated. Now, a lot of you would have maybe done some studies about mutual fund in a project or something, or you may do in the future. Mutual funds is nothing but a vehicle which has been designed, an investment vehicle, where all investors, whether it's you, your professors, me, or someone else across the world, across the country, they can pool their investments together. And the fund manager, which is designated for that vehicle, will invest that money in different securities. All those different securities, stocks will generate income for you, and that income is passed back to the investor. Now, this is how a traditional mutual fund operates. Now, how does the ESG fit in? The fund manager will use the ESG framework to decide what stocks will they buy, right? And most of those stocks will have ESG ratings, and those ratings, if they are good ratings, like rating is given between a score from 1 to 100. Now 40 is like the investment grade. So below 40, if you're buying, then those those companies will be risky companies. But if you're buying any company which is rated 40 and upwards, which is like 40, 39, 38, 37, the closer to single digit, the better it is. He will buy such securities which will generate returns, and those are passed back to the investors. Now, this is what happens in the stock variety or the equity ESG investing. Now, there is debt market investing also, which is called green bonds. You would be hearing about green bonds a lot more now in India than probably what we did earlier. Now, what is a green bond? Like it suggests, it's a bond which is a fixed coupon instrument where the proceeds of these bonds which are collected are deployed in climate and environmental projects. Now, what projects? Projects which help sustainable land use, projects which do waste management solutions, projects which increase energy efficiency, projects which do clean water solutions. Now, if you look at clean water solution, the image is telling you what it will do. If you look at energy efficiency, the image is telling you that recyclable energy will be created. If you look at waste management solution image, then you know, okay, this we are talking about reuse, reduce, and recycle, right? What is a sustainable land use? Let me explain this with one graph which I found in one of the presentations used some time back, where it talks about what happens when you do different projects. So, for example, if you do agriculture, now it's a land intensification project where you cultivate the same land to give you more output, right? Now, environmentally, it is not good for the land. But there are social benefits and there is economic benefit. So agriculture is given precedence. But per se for the land, it is not good in long term. If you look at mining, it only has economic benefit. It does not have any environmental benefits, and there are long-term social issues like health hazards and all of that. So only economic benefits come out from mining. But if you look at environmental conservation or tourism, it helps the environment, preserve environment. It gives you social benefits. It also gives you economic benefits. So green bonds typically are coming out, and where the proceeds are supposed to go to sustainable land use are going for projects where all the three of them benefit. So that's the difference between how a sustainable land use and vis-a-vis someone else. Now, the entire green bond market is almost $1 trillion market. And of course, it is dominated by the European currency, US currency, Chinese currency. It is who issues them. A sovereign can issue. What is a sovereign? Means that the country can issue, right? Developmental banks can issue, financial corporations can issue, government-backed entities can issue, non-financial corporates can issue. Right now, they are largely in the developed markets. Some of them are in the emerging markets. But if I have to put down $1 trillion across the world map will look like this, right? So USA and China are dominating this, and some of the other countries are now coming. Now you can also see India here, right? Now you must be wondering, okay, India has also started doing green bonds. Now, who are doing green bonds? Now, there have been 2-3 different segments who have issued green bonds in India. First was issued by Yes Bank in 2015 and then 16. Then the Indian Railway Finance Corporation debuted its green bond in London Stock Exchange in 2017. And recently, like last year, we saw Ghaziabad Municipal Corporation issuing a green bond on the BSE bond platform. So you have 3 different examples. Now, you may complete your studies and decide to join, either you want to join, do something more and eventually join some corporations, or you would want to join some NBFC, or you want to join a bank. You have 3 different examples of 3 different entities in India issuing green bonds. So Believe me that as we will progress in India, you will find more green bonds coming. In fact, recently HDFC Limited also announced its green bond option. So you are going to find more examples of green bond which are going to come out. So if you want to know more about how these work, please go and read about how the BSC bond platform works, or how the bank operates on this segment, right? Now, all of this is fine. Does it have employable opportunities? Is it good for all of you listening to this lecture today? And how does it help you? Now, already there are two major certifications which have come out on ESG. Now, 85% of the risk professionals are saying that they need greater SCR knowledge, which is sustainability climate risk knowledge. And this is a certification which is issued by GARP. It's a leading institute on risk management solutions. CFA Institute has also launched its first global certificate in ESG investing. So these are great institutes doing their work for certification programs. We now have leading B schools in the country, which are also preparing their future executives with ESG training. So I really salute your institute and Professor Neeraj to actually have a session on ESG investing today, to talk to you about before even at your induction level, because tomorrow it will become important for all of you. And it is not necessary that you be only in finance field to know this. You may end up working for other businesses which will also adhere to these principles, right? And if today you go and search for ESG analyst jobs in India, you will at least find more than 1,000 jobs already existing. So by the time you finish your work and you come out, there will be more jobs in this space. Any risk professional who wants to do or end up being in the finance world will at some point of time do an ESG certification. And so these are all available. You can go and search more about ESG to know more about it. Last but not the least, in the words of Warren Buffett, it takes a lifetime to create your reputation, but only 5 minutes to destroy it. And what ESG framework is going to do is keep identifying those red flags for the companies to take action, because like we have seen in many of the examples, and big brands and also brands in India, banks in India, pharma companies in India, that 5 minutes can destroy action that you take which is non-ESG compliant, can actually have a dent in your reputation for a lifetime. So as you prepare your career further, and as you keep learning a lot more subjects and topics during your induction, and of course the next 2-3 years that you will go through this program, you will find your core competency, you will find your core beliefs, and you will find your core work area that you would want to pursue your career with. Same way, when you will start doing your investments, please remember that ESG could be your core portfolio. So you please keep a mind and look out for anything that you can read about this, because this is where the future is headed. With that, I conclude my session. Thank you very much for giving me this opportunity to talk about something which is going to happen in future, but it's already happened as we talk today.
Thank you very much, sir, for giving an overview of ESG. Now, I would like to take some questions now. As you have already told that ESG investment in 2020 is $51.1 billion. And in 2030, we can expect it to be a $100 trillion. Right, sir? So yes, there are the opportunities for finance students. But apart from that, do you think that there are the opportunities for marketing and HR students too in this sector? Over to you, sir.
Yeah, it's a great question, because when we come from the finance field, we tend to talk a little bit more about what's happening in the finance world. But like we said, that if you're, for example, let me take an example of a FMCG company, right? Um, and say it is making talcum powder, just for an example. Now, the process of that making that talcum powder, if it is not on the ESG framework, people may choose to not use that and go to another company which uses its entire processing unit on the ESG principle. Now, when we talk about that, how you one may say, how is it impacted? Who's making, who's working in the factory? The worker is working in the factory. Are the wages paid on time? Are they paid adequately? Is there any cost cutting happening there? Are you forcing them to work more? All of that has a negative score on ESG. Are you employing child labor? It's a strict no, right? So, what are the processes used? What are the, maybe the packaging material? What packaging material are you using? Is it environmental friendly or not? All of that has scores. So it may not be that you're only working in finance field and you are impacted with ESG. You may be the marketing guy for that talcum powder in the market, and if the consumers are going to tell you that, look, whatever material that you are using is not environmental friendly, it's not recyclable, then hence we are going to choose another product which is at the same cost but doing all of that. The bottles are recyclable, the way it is being produced is in a hygienic condition, people are paid on time, the workers are happy about it, you have good feedback overall, we will choose someone else against you. Then whether if you're, it doesn't matter whether you're in finance world or you're doing a marketing of a talcum powder which is an FMCG, you will be impacted.
Thank you, sir. Thank you very much. Next question is, already you have covered most of the part of this question, that for employability, CFA Institute provides the certification. Also, some B schools are working on this to provide certification. So apart from this certification, as students are with us for 2 years, once
Sure.
they will enter the institute. So do you think that any of the other skills which will help them to grow and enter into your sector? Over to you, sir.
Sure. No, there are other certification programs like, because once you're starting, you have the time, right? Now, we've 17, 18 years into the career, and every day brings us a new challenge of doing our work and our businesses and taking them forward. Sometimes we are short-handed on time to do some extra learning, right? Having said that, I mean, I'll just put it out that uh, I'm personally doing a course on fintech for emerging leaders to understand how is that segment sort of shaping up and moving ahead. But I, this is the time in your lives when you will have time on hand to learn, right? And you're not going to start learning something um, with the inhibition that you know this. Like for us, once you finish a certain amount of work career, there are always inhibitions that, oh, this is not going to help me, right? So whatever comes along which you find that is going to help you, please give it, and don't worry about whether you should be doing it with XYZ certificate. Yes, uh, I do believe that over a period of time, the certifications will become necessary for you to be going ahead in the queue while the opportunities come up. So do that if you have time on hand to keep doing them along with it. If you don't want to go for like these serious certifications, you would probably want to just test waters to understand how does it happen. There are many companies, like in our field there is one institute called AIWMI which is doing wealth management professional trainings, and these are add-on trainings. This is not going to tell you how you should be prepared from an MBA aspect. No, that is a B school's job, and your school will do it for you. Post that, as you keep learning about new things, there are different certifications which keep coming. NSC has its own course of certifications on derivatives and trades. CIL has its own another institute which imparts knowledge training about our specific field. So they have certification courses. So you can go through the websites and see what appeals to you and how you can do. But one thing is for sure, like I mean, specific to the question which came up, that you will need some added knowledge with you and understanding of how is that practically implemented will definitely help. So if you get something to work with, please do that. We also, whenever we also interview people, we look forward for what are the practical applications the person would have gone through, uh, and what work is he doing and how connected he is with not just the field but also the general awareness of how things are progressing for future. If somebody has that understanding, it becomes an ideal candidate.
Thank you, sir. Thank you very much. As you have already told us that mutual fund and ESG have a relation, direct relation. And also you focused on green bonds, especially the providers are Yes Bank, Indian Railway, Ghaziabad Municipal Corporation. So what is your view that means these sectors will grow in future and will generate more employability for our students, or it will be average, means where you find more employability for our student as per your experience? Over to you, sir.
Particularly from a finance aspect, having knowledge of ESG, how it works, because see, in the field of finance, in field of investing, there are two sides. One is the marketing angle of it, to take that product out and to the consumers. One is managing that investments. If you're going to be on the investment side, buy side, where you're going to manage investing, there these knowledges are going to be of immense help over a period of time, where you would know that what are the concepts, what should I be looking for, what are the red flags I should be looking at. It will definitely have a big added advantage. If you're on the marketing side, you need not know this concept in depth, but you should know what it means. How do you present to your audience? And this has nothing to do with whether you're in finance or see any other thing. Like for example, the talcum example that I gave of the talcum powder, that has nothing to do with finance, but it's about general awareness. If you're aware of the concept, how does it work? How can you relate it to your product? It sells. Storytelling is the best form of communicating your idea, your product to anyone. Let me ask you, Neeraj, about it. That in the whole presentation, probably you would remember the example of the bridge much
Right,
more
sir.
than anything else, right? And what is it? It's taking a story, it's connecting those dots and presenting it. Now, if you're not aware of the concepts, it will become difficult, whatever field you are in.
Thank you, sir. Thank you very much. My next question you can answer in one line. Then also it's fine because you have covered this. Means ESG analyst jobs are increasing day by day, and there are more vacancies now. So is it related directly with the developed countries, or it is applicable for undeveloped too? Over to you, sir. You can answer in one line also. Then also it's fine.
No, that search was India specific search. That wasn't a world search. So I think that answers the question.
So in India, we have a lot of opportunity in ESG related funds.
ESG related profiles.
Sorry, profiles. Yes.
Yes.
Yes,
So
sir.
if you're going to be an analyst, right? If you have done a certification in ESG, it will be of big help for you if you want to be a financial analyst.
Sir, now we will take last question.
Sure.
It depends on you how you share this. Okay.
Sure.
One mistake of life which you want to share with our students so that they will, if they will avoid, they will grow fast in finance sector. And one positive point which you did in your complete job profile, which help you in grow faster. So mistake and opportunity of your life, so that it will help our student to enter into right specific sector. Over to you, sir.
There have been too many mistakes, so difficult to sort of pinpoint one. But one which I regret is not starting investing earlier, because as you start now that I'm with this field, and I've been in this field for good 15 years now, I realize that the earlier part of my work life, where the understanding, and maybe I can go back and say that to 2002 2003, probably not many people knew about equity investing and investing in markets. But that is a phase which I believe was the best phase for India, 2003 to 2007. The compounding effect of money is very large if you start early. And I'll give you my take on it. If you look at the life expectancy of India at the time of when India, got independence, was about 47 years. Average life expectancy. Somebody would have lived 60 years, 70 years, but somebody would have died earlier also, right? So the average expectancy was 47 years, and over the period of time, it has only increased, right? So by 2030, it is expected that average life expectancy will be around um, um, 73 for India. That doesn't mean that somebody will not live. I have two people in my house. We celebrated 90 plus, right? So people will live, correct? Um, but look at what has changed apart from that. The medical advancements are making people live longer, but their work life is reducing. When India got independence until up till 1970s or early 60s, matriculation exam was considered good enough for to get you a job. Matriculation is what? Today's 10th. Today's 10th will not get you anywhere. So as the decade started passing, the qualification criteria, the age criteria started going up, right? And it became like, later it became 12th, it became then graduation. Today, along with graduation, you will find a job, but you want to do a B school program, you want to do some other certification. So by the time you guys graduate and come out, probably you will be 24, 25 before you get an actual meaningful job, right? Which you will really enjoy. That yes, all that effort that I put for the last 15 years of my life, this is now where I stand. But you will retire by 58. Earlier, people used to work to 70 years and all of that. The corporate life, you retire by 58. So your working life is shrinking, but your pre-working life and your post-working life is actually increasing. And we need money for that. So if you start investing earlier, it will really help all of you. So keep that in mind. I'm not trying to scare you off. I'm just saying that this is what has happened. And yeah, so that probably is my mistake of life, of not starting investing earlier, which I'm with my son, I'm not repeating. He already has a good portfolio by now. Probably his portfolio is looking better than my portfolio.
Thank you, sir. Thank you very
Sorry,
much.
I missed your second part of the question.
Yes, sir. That's what I'm trying to tell you. Yes, over to you, sir.
So, so I think you said what has been the biggest positive of my life. Till date, the biggest positive of my life, I would say, is I have worked in uh, 3-4 different industries. So started off with telecom, then I've worked with insurance, then mostly on quants, and then now on the mutual fund side, where I'm going out and distributing products. So sometimes same company can give you a lot of exposures, like this present organization I'm working with. It's been 13 years and I've got different opportunities to do different roles. But it's also the knowledge that I gained of doing work in different industries, which sometimes helps me connect dots. So it's very important to connect dots. It's very important to know where you stand, what is your learning, and be able to apply that in practical life. If you can do that, it will really be helpful. It has helped me The second, I would say, the positive thing is sometimes if sticking to the same company, I see a lot of young people, they work for 2-3 years and then they feel that, okay, I've exhausted my learning curve, then I would like to move on. Sometimes your same company, if it's growing, they're doing well, can give you that opportunity. I have seen that. I joined this company as an assistant manager. Today, you know, I'm heading a division of sales. So staying put with a company which is growing will help you also grow. You need to trust that organization that it can deliver for you. So you deliver time to them, it can deliver value to you.
Thank you, sir. Thank you very much. And with this note, I would like to conclude this session, especially your views on ESG investment with the excellent photo of water boiling, that is at 211 degree Fahrenheit and 212 degree Fahrenheit. Really, I appreciate the way you have explained the things and connect them with the real life examples. Also, sir, the environment, social and governance (ESG) will help our students to enter into right sector, because this is the sector which is going to boom in future. Also, the uh, employability is available with the CFA Institute and B schools. The certifications, if student will do, the thing which you have covered like mutual fund and ESG relation, and also the things with 3 index fund which you have shared, that Nifty 100 ESG index, Nifty 100 enhanced ESG index, and Nifty 100 ESG sector leaders. So which will give a glimpse of the mutual funds to our students. And your uh, 1 point of advice which will help all our students is start investing early. So with this note, I would like to conclude this session and thank you very much for giving these insights to our students, and which will really help them to enter in right domain at right time. Thank you, sir. Thank you very much.
Thank you for inviting me, and I hope I've been able to do justice with the time given to me. I look forward for opportunities to connect back with this set of people sometime later to see whether whatever we spoke today is of any value for them later on. Thank you very much.
Yes, sir.
Have a
Also,
good
we
day.
would like to invite you physically for physical interaction with our students once type permit your availability and government's norms to enter the student in institute.
Yeah, I look forward. I'll be happy to meet everyone in person. Thank you.
Yes, sir. Thank you, sir. Thank you very much.
Thank you. Have a good day ahead.
Okay, sir. Thank you. So, dear student, I have already pasted the link for feedback. Name is mismatch, but the link is proper. So please fill the feedback in the link. Thank you.